Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good morning, everybody. How y'all doing? Y'all let me know if y'all can hear me. Okay. Last night, y'all kept saying my audio was going out. Your audio getting low, Tim. I can't hear you, Tim. So, do y'all hear me good inside Zoom?
All clear.
All clear. Okay. We got the all clear from Yolanda. All right. I'm trying to get my God dog it, Tim. Good morning, everybody. Welcome. If this is your first time tuning in to Tim's Tidbits, allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome, but also give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That just means a big spot if you don't hablo español. And you're in tune to another episode of Facilitation February. We are in the tape reading session. We are at the home stretch. We've been together every day for the majority of the month, looking at videos, deep diving into concepts, and now we're in the tape reading session. Monday, we had a nice tape reading session. Last night, we had a nice tape reading session. Today, we're going to have a nice tape reading session. We have been learning. We have been edifying. We have been just having a grand old time here at whatever you want to call this. I always say the gang. I don't know. Right here in our little playground where we are now. Welcome, right? Now, we're going to go ahead and get right into it. I ain't going to waste a whole lot of time today. Shout out to everybody that's here. Okay, Tim, it'd help if you had your trade view open. Shout out to everybody that's here. Shout out to everybody that's on YouTube. We've hit that weekly high, y'all. We got to the weekly high we was looking at last night. It has hit the weekly high. Tim, what does that mean? That means if I shared my screen, wouldn't it? I shared my screen. You know what? I see this will be happening. I share my screen in Zoom, and then I share my screen, and it's making it too complicated. So I'm just sharing my screen. I'm just sharing it in one place. Right? Zoom If y'all say the counters be blurry, when I share it like this right here, the counters just fun to be blurry. You feel me? Cause I can't be trying to share it 90 times. All right? I can't be trying to share it 90 times. Cause when I'm looking at it, right? When I'm looking at my Zoom, it's big, right? It's big. It's like I have a little small. It's going to the matrix. There's a small me at the top, but there's a big me down here, right? In the bottom part. So maybe it's the view, maybe because I can change it. I can go in there and see the view. I could change it to gallery, and that makes it just be everybody small like that. But when I put it on speaker, see, it puts it big. See, I got my little picture up there, but then it puts it big down there. Maybe you have to change the view. I don't know. Because if you put it on, see, if I put it on multi-speaker, right, it puts it at the top. It, like, if another person talk, they'll come up there beside me. You know what I'm saying? But if I just put it on speaker, it just puts it right there. I don't know. I ain't double sharing. Because, see, I was about to start talking, and I wasn't sharing my screen with YouTube. Matter of fact, I had already started talking about we hit the highs, and I hadn't shared my screen with YouTube. Happy Wednesday, family. Charlie Brown. All right. Y'all come on here, man. Do me a favor. Hit a like for the algorithm. If you're not subscribed to the channel, please do so. Now, what does that mean? That means that we have extended, right? We've extended the buy program. We've expanded the dealing range. I'm sorry, right? The buy program that we created yesterday with yesterday's dealing range, right? I think Marco might have asked about it, right? What I like to do, I like to mark out the previous day's high and low as my base dealing range for my intraday trading. You know what I'm saying? And then I keep in mind, where are we in the scope of the overall dealing range? Okay, so let's talk about it. Yesterday, right, we created a bullish dealing range. Okay, we took out sell side liquidity, we took out buy side liquidity, right? Sell side first, buy side second. That's a bullish dealing range, right? That's meaning price is going up. All right, manipulated lows, distribute above highs, bullish dealing range. Okay, overnight we traded higher than the high. We engaged the external liquidity to the buy side, so we've extended the dealing range. So now I have it anchored at yesterday's high and yesterday's low, meaning this fib tool, right? So now what we need to do is extend our box. Remember I talk about the box theory. We extend our box up. All right. So now this is the dealing range. If I can get it on the candle. Let me turn these on so I can see them. I don't have the high and the low showing, so I need to turn it on so I can see it. All right. So now we extend our box. Now the box is extended. Okay. So now that's the overall dealing range at this moment. The entire dealing range based off of the previous day's range, right? We've expanded a little bit more inside the dealing range. Okay. So now based off of the overall time frame, right? Last week we created a bullish dealing range. So now we've extended that range also, right? Because we took out sell side, took out buy side. That was our high, and we had traded back down, right? Swept that liquidity and then started to move back up, and now we've extended that range, right? So for the weekly dealing range from prior week's dealing range, we've extended that range, so it'll be from that low up to the same high where we are now, right? If you're looking at your weekly range, okay? So if we're just looking at our I hate when I can't get it on there. Oh, it is on there. No, it's not. There you go. All right. So looking at it from the weekly span, that's the overall range for the weekly time frame. Well, not the weekly time frame, but based off of the prior weeks. So in the short term, right? In the short term, based off recent price action, right? Price has started to create a buy program. It's respecting bullish order flow in the short term, okay? Based off price action from last week, we created, because going into last week, we were still in a sell program respecting bearish order flow, right? Prior to come, because this is when we start, well, this is when we started last week here, right? We started last week here, and coming into last week, right? We were in a clear sell program, right? And we started out in the discount of this sell program. Now, if I'm not mistaken, I think that's our high from our 20-day look back. Let's check that. It is, right? Right. So that's the high of our 20-day look back. That's the low of our 20-day look back down here. And coming into last week, we were in a sell program, and we were in the discount, deep discount of our dealing range, right? Because the lower quadrant is a deep discount. Anything below equilibrium is a discount. Anything above equilibrium is a premium. And anything from the upper quadrant up is a deep premium. Okay. So we opened up last week in a deep discount. Okay. We opened up in a deep discount. We came down, manipulated sell side, right? Manipulated buy side and created a bullish dealing range, right? We created a bullish dealing range in a deep discount. Since we created that bullish dealing range in a deep discount, price has been respecting bullish order flow, right? We've been respecting bullish order flow. Now, Tim, what does that mean? That means that over here, right? Over here, when we came down inside this sell program, okay, when we pushed back up here and got this break in market structure, right, we can now, since we are respecting bullish order flow in the short term here, right, we can now start to eyeball this to see if the algorithm is going to treat this as the smart money reversal. We're eyeballing that now to see if the algorithm treats that as the smart money reversal. But Tim, why do you say we're eyeballing it? Because we're still overall from our 20-day look back, we're still in a sell program. All right, the sell program has not been invalidated for our 20-day look back. Okay, we came up to a premium. Okay, we came back down, right? We came to a premium, but we did not extend the sell program. That's why we're eyeballing this as a possible smart money reversal. Okay, because we came back to a premium and we didn't extend the sale program. I mean, we didn't extend the dealing range. All right. Lower quadrant acting as support right now. Okay. We're continuously respecting bullish order flow, which all makes sense right now. Why? We're in a discount of our dealing range. Smart money buys in a discount and sells in a premium. Okay. If we take out this high right there, taking out this high here, right, then that at that point in time would identify this as a low risk buy and this as a smart money reversal, and we will be looking for reasons to complete the market maker buy model up at the high of the 20-day look back right now, because we've come to a premium and we did not extend the dealing range. Okay, price comes back up and takes out this high, right? We're continuously respecting bullish order flow, because that will be coming up, coming back to a discount, moving up, right? See, we're respecting the bullish order flow, because if we come here and we go to the highest high, back down to the low, I'm just gonna rough it because it's really getting on my nerve with that. See, we went up to a premium of this range, created a bullish dealing range, came back down to a deep discount of the bullish dealing range that we created, and now see where we're consolidating at. Where does price consolidate? Price consolidates at fair value. It consolidates at equilibrium. We talked about this last night, I believe, right? And this is equilibrium of this bullish dealing range that we created when we got down and made this low. We've been consolidating there, engineering liquidity. We talked about this. It's just engineering liquidity. It's not showing a willingness to want to leave outside of this range in either direction. So when it's not showing a willingness to leave outside the range for the higher time frame, you just wait until it leaves the range. Okay, and then in the meantime, you just trade the signatures that you see inside that range. You play the range. Now, when you look at price on a daily time frame, all right, we're looking at price on a daily. Is my audio good for everybody? It's not going in and out, is it?
We good in Zoom.
All right. You good? So on a daily time frame, we now see that this high that we was talking about on the weekly, that weekly high. Remember we said Monday we had come down, taken out sell side, and then we had came back up and was heading toward that high. And we said, I think it was last night we talked about this. We said, if we take that high, that would confirm a bullish Judas swing, right? And we're just looking at it from the sense of daily candles. Sell side taken, reverse back to the buy side, right? This high and that low, right? That was the highest high and the lowest low coming into this week in close price, right? This is the weekly low, that's the weekly high. Don't get it confused with that. But we came down, took liquidity from this range, right? And then we went back to the opposite end of that liquidity. That's a bullish Judas swing from the high to the low. That's why we was watching that high to see if we get a bullish Judas swing. Right, a bullish Judas swing inside of a short-term buy program is in support of that bullish narrative, right? So now we've gotten that bullish Judas swing, another signature showing that price is still respecting bullish order flow in the short term, right? So now we went back to a premium, came down, went back to a premium, and did not extend the bearish dealing range, right? Now we are coming back up, and then I said taking out that high right there, right? That would give us our low risk buy, right? That's the move that I was talking about there. We come down. This is what we're eyeballing as the smart money reversal, right? And if we take out that high, that would give us our low risk buy right there. Okay, but we're still not out of the woods yet, right? With Tim, when are we going to be out of the woods? This sell program is not invalidated until we take out the high. That's just the nature of the beast, right? That's just the nature of this sell program is not invalidated until we take out that high. Okay, just like a buy program is not invalidated until you take out the low, right? Right. So right now we're respecting bullish order flow here. Remember, we came up, came back down. We're respecting bullish order flow right now. Okay, remember we was watching this down close candle as a potential order block, even though we said until we print this price, right, the official order block does not exist until we print that price. But being that we've come down and swept liquidity inside a overall buy program, right, we're watching this down close candle as a potential bullish order block. Why? It's in the discount of this move, deep discount of this move. It's in line with that lower quadrant. Mean threshold is roughly around there. All right. God dog it. Click on. All right. Come here. Put that mean threshold. All right. Mean threshold of the order block, lower quadrant of the range. Okay. Using it as support. All right. That's PD array within our 20-day look back. This suspension block, PD array within our 20-day look back. All right. This bearish order block, PD array within our 20-day look back. Right. Bearish order block designed to keep price down. Right. This potential bullish order block designed to keep price up. Suspension block right at equilibrium. Right. It's a bearish suspension block. By nature, it should send price to that low. It has not done that. We came back to the suspension block, did not send price to that low. Bearish breaker, right, should send price to that low. This bearish breaker's job is to stop price from getting back up here so that anybody who went, anybody who has stops up here, they can't, you know what I'm saying? I'm trying to think. On a breakout here, right? They've come down, they've been stopped out. Anybody who went short here, right? Their stops is going to be above some highs somewhere, above highs. If they trade it on a breakout here, right? This breaker's job is to stop the price from getting back up and letting them get out of positions above highs. Okay, so that breaker is not sending price back down, right? We're just here accumulating, right? But it's not. So right now, it's not a low resistance liquidity run to the downside. It's not sending price down. It's not sending price down, right? It's not sending price down, right? Remember we said you have a gap in line with the wick, right? You want to see the sensitivity in that wick. We get to that wick, right? Remember we studied that, right? We get to that wick, we see the sensitivity, but it's not sending price down. Price is stalling. It's not in a hurry to keep going, right? We're starting to respect bullish order flow. So you're eyeballing this. Is that a smart money reversal, right? Eyeballing this. Is that a low risk buy? Okay. And then you start to monitor what confirms this as such, right? Right. There are possible smart money reversal. What confirms that? If this low risk buy takes out that high, right? So now we're extending up the right side of the market maker buy model, right? Breaking this high confirms smart money reversal, low risk buy. All right. But again, you're not out of the woods yet, because in the sense of ICT-dom, right, from the high to the low, this, we still haven't even come up to optimal trade entry yet. In the sense of all this, we still haven't come up to optimal trade entry. So this bearish order block rests inside of the optimal trade entry for a short. That's why I say it's not invalidated until we take out this high. Okay. Now, yes.
The bearish breaker, would we still consider those two down close candles the entire breaker, or because there's a gap between them, only that last gap?
This is the whole breaker, right? This
Even
liquidity void
there, so okay.
This liquidity void, that's just one big bearish move. You just don't have a candle there to see, but that's one big bearish move. So this whole drop down, you're just looking at, you just take this candle and just extend it down in your mind. So this right here is your breaker.
So that makes it allowable for OT entry to come up that high, because in that area.
No, they ain't got nothing to do with that.
No, I'm just saying, in that area, in that like 62, would that be in alignment with the 62? I can't see if that's 62 in that area or not.
Yeah, this the OT here, but OTE ain't got nothing to do with this.
So we got the bearish breaker and the order block all in it. That's what I'm just saying for confluence wise.
Oh, okay, yeah. Yeah, but OTE ain't got nothing to do with no PD arrays. It ain't got nothing to do with no PD arrays. I was just using it as an example of how far in a range price can move and just be getting to what would be an optimal trade entry. Because OTE is based off of other criteria also, but I was just using it to illustrate how far price can go and you still be in the realms of going back down. I was using that as saying this is when the sell program is invalidated. All right. But yes, all of that is a bunch of confluence. Okay. Now, we're starting to move. Oh, the market already opened. So we're going to get to price reading. We're going to get, that's enough with the analysis. We're going to get to looking at price now, because we still haven't even looked at our ranges or nothing. All right, so let's go through that real quick. We immediately took out the pre-market high. Pre-market high was immediately engaged. All right. Is my screen big or small inside Zoom?
Regular.
But is it the full screen, or is it just a little square? Are y'all looking at my little square next to y'all little square? That's what I'm asking.
Oh no, I'm on full screen.
No, it's the full screen.
Oh, okay. All right. I was just asking because Yolanda said she couldn't see the if that was 62 or not.
That's because I'm on my phone. I'm about to get to my computer. That's why I couldn't.
Oh, okay. What am I looking for? Pre-market buy side, yeah. We immediately took out the pre-market high. That's our pre-market high there. We immediately took that out. Our pre-market low. Whenever you're going into the session, you typically want to have this done before the session starts. You want to look at your pre-market high, your pre-market low. Why are you looking at that? Because that's a dealing range that the algorithm has established for you, and you can work within the confines of that range to make trading decisions, right? You let it establish a range. You wait for the market to engage with one side of the liquidity and start looking for signatures. Does it want to reverse to the opposing side, or does it want to continue? All right. And we're continuously extending our range. Yesterday's low, yesterday's high, and we're extending it, right? We're still respecting bullish order flow. Same thing that we pointed out last night, right? When we was talking about balanced price ranges, right? So now we've started to leave this area, right? After attacking this high. So now when you start leaving an area, right, now price is leaving it and it's saying this is a balanced price range now. Now, if you're above a balanced price range and order flow is bullish, you want to see this balanced price range act as support, right? You want to see it act as support. If you're above a balanced price range and price is bearish, you want to see the algorithm cut through it like butter, just slice through this range, right? Now, we've engaged the weekly high. All right, we've engaged the weekly high while we're coming down in an overall overall sell program, right? From here to there for our 20-day look back. We've engaged the weekly high, right? We come back up, right? If we come back up to a premium, if we come back up to that high, no matter how far we run up, right? Now that we've engaged this weekly high, if price comes back down and start to break structure to the downside, then your reasonable target would be drawing toward that weekly low. It's the opposite range of, opposite end of that algorithmic dealing range. Just like when you come into pre-market, if you engage pre-market high and then break structure, your reasonable target would be pre-market low, right? If you engage a daily high, then break structure, your reasonable target would be the daily low. All right. It doesn't have to get there, but that would be a reasonable draw on liquidity. What decides if it gets there? If we are in a sell program and take out a weekly high and then break structure, then the probability of going to the low is heightened. All right. Now we're in a discount and we are respecting bullish order flow. All right. So now you will be looking at this as a continuation pattern, right? You'll be looking at this as a continuation pattern, especially if you're remaining in the discount of the overall range, right? Because we're in the discount and we're respecting bullish order flow. So continuing to respect bullish order flow, now you want to see this be used as support because we're still in a discount and we've been respecting bullish order flow for all this time, right? So now you'll be looking for reasons for price to continue upward. All right. Now, today is Wednesday. Right? Today is Wednesday. When we come here to our daily time frame, okay? When we come here to our daily time frame, this is Monday, right? On Monday, you see, we start to come down, right? Because we came down, set relative equal lows.
Hey, Tim, look like you on a weekly.
Oh, I was. Well, let's go to that weekly time frame since I was there. We've come down, set relative equal lows. All right, rejected up, right? Pushed back up into the order block, came down, failed to take out the low. Right, and then the next week we came down, swept that low, and now we're pushing back up, right? So now if we trade above that high, right, what is that? That gives us a bullish Judas swing on the weekly, right? Because we went from the low to the high, right? If we take out that high right there on the weekly time frame, right? So let's mark that out there. Now go down to the daily Go back to the weekly. Let's see here. Go down to the daily. All right. And we see that that's the high that we was talking about for that would give us the low risk buy. Okay. That would give us the low risk buy, and that would give us the bullish Judy swing on the weekly time frame. All right. So now here on the daily time frame, this is Monday. We've come down, taken out the low, traded back up, taking out the high. So we got a bullish Judy swing on a daily time frame. All right, we're starting to leave this area. The day is not over yet. We've got to wait to see how this day closes, but we're starting to leave this area here. So now if this day closes and we stay up outside of this area, now we're going to be looking at the possibility of creating a BISI here. All right, we'll be looking at the possibility of creating a BISI here. So then Thursday, you want to see how does Thursday trade. Does Thursday trade up and take out that high and create a BISI? Do we do Thursday create a BISI and don't take out that high? Does Thursday trade back down and don't create a BISI? That's what you're looking for, right? So now that we're leaving this area, what are we watching? Now that we left this area, once we offered this price right here, right, we got a bullish order block right there. Right, once we offered that price on yesterday, we traded up above that opening price right there. So now we're watching this as a bullish order block right here. Okay, we come down, took liquidity, offered that price, and now we're expanding away. Right, watching this as a bullish order block. Right, we got a new week opening gap, we got a bullish order block. We have an inversion fair value gap. Remember, that's the 12th. We have been watching that right there. Right? We've been watching that over there from the 12th. Boom. The inversion fair value gap right there. Right? All this stuff we was looking for it to act as support. Right now, if we take out this high right there and close above that, now we got an inversion suspension block. Right? Inversion fair value gap here. Right? If we close above this suspension block, now that's another confluence to the bullishness, right? This is all the stuff you just watch this stuff, watch this stuff. Okay, if price does this, then it should do that, right? For everybody that be like, well, you're just talking about if, because these are signatures you're watching for. So you say, if price does this, then it should do that. That's how you choose, what am I going to trade off of? What am I going to do? How am I going to enter? How am I going to exit? Oh, I got in down here. Oh, we didn't do that. We're failing to find support here. I may want to, trim. I may want to lock in a little bit more profit because we're not respecting this bullish order block. We're starting to trade down too deep. I want to lock in some profit. We are respecting the bullish order block. I'm going to lock in profit, but I'm not worried about it. It helps you with your trading decisions. Okay. All right. She's a runner. She a track star today. All right. So now that's our overall range right there from yesterday going up. Right now we are in a treetop tall premium, right? This is where we opened up yesterday. We didn't have a gap, right? So I'm going to hide yesterday's range right now, right? That's our high, that's our low. We forgot to look at our opening range gap. For those that study the opening range gap, right, this is where we closed at yesterday, and this is where we opened today. That's your opening range gap from the New York close to the New York open. That's your opening range gap right there. All right.
Since we took off like that front, could you look at that as a runaway? Or, I mean, not a runaway, a breakaway gap, and measure for a possibility of how how you could go, or nothing's ever been discussed about that?
Not really. Only thing Michael talked about for that is he said if it's more than like I think like 125 or 150 points or something like that, he said he don't look for it to be filled immediately. If it's like over, I think it was like either 125 or 150, he don't look for it to be like retraced all the way back in. So and you see here we had like a gap and go, right? It's not always going to do that, but we had a gap and go. And so like today she a runner, she a track star. So based off of it running away from it, ain't nothing been discussed about looking at it as being a breakaway gap. Now, like I say, the only thing he said was like the size of it, the likelihood of it filling are lowered when it's like over like either 125 or 150 points. I really can't remember because I don't really trade the new day opening gap that much. I just want to be aware of where it is. But like I said, nothing been discussed about the momentum at which it leaves it. The only thing you can say right now about when price does something like this is you just don't chase it. You just don't chase it. Like it's just running right now today, so you just don't chase it. We immediately engaged the buy side. Now we're back up to equilibrium of our 20-day look back right now. And so with this amount of momentum leaving this area, now this is when you would insist that price respects this as a balanced price range, right? Because we got so much momentum leaving here, right? If price is truly bullish, it will respect this as a balanced price range. Now, if this is just going to sweep liquidity for the overall sell program, then price should just cut through this like butter. It should be no coming back and stalling around here, right? And why is that? Because when price is bullish, it will stair step up the quadrants, right? When price is bearish, it will stair step down the quadrants like this. And right now, price is stair stepping up. We went up to equilibrium, came back down to the lower quadrant. Now we're going back up, right? We're back at equilibrium. If we push past this high, right, it should keep going up to the upper quadrant. And then maybe come back to equilibrium and then continue up, right? It's going to stair step up the quadrants, up your roadmap. All right. Let's look over here and look for any types of resistance that should keep us down. Again, that high that we marked out over here just now, I'm going to change this to just buy side instead of having another weekly thing up there. I'm going to make it fat so that I know that was like a higher time frame. That was like a weekly. That was from a weekly chart. All right, let's go over here to like a 60-minute time frame real quick and look to see. We have this is our first fair value gap after this turtle soup right here. All right, so we had a turtle soup there. We had a turtle soup here. Boop, trade above that high. First fair value gap after the turtle soup is right in line with a quadrant right there. So now if price gets above that, right, and takes out that high there and gets a closure above that, then that right there would be an inversion fair value gap right here. Where we closed there, closed here, 208.25, open it to it so there's no gap there, right? In line with a quadrant there. So now that's your high probability inversion fair value gap. All right. Turtle soup, first imbalance, right? Come down, trade back up. We get an hourly closure above that right there. That's your high probability inversion fair value gap. We're getting this heavy displacement away here. Now, what I would like to see, instead of chasing, I would like to see, in order to participate, is price come up, right? Maybe even take this high and create a relative equal high. Then trade back down into a discount. Let's say if we take out this high right here, we're just gonna put it at that high, and then we're gonna come back from when we're leaving this area right here. Right, so we'll go right there. Right. So if we went all the way up and tapped that high, right? If price came all the way up and tapped that high, right? I would like to see price come back down, right, into a discount of this range here to give an opportunity to participate, because we've got so much momentum above this high there, right? And now I want to see price come back down to a discount if we went up to there, and then give an opportunity to participate. All right. If we just went no further than we are now, right? Same thing. Come back down to a discount of the range, leaving this area right here, and give an opportunity to participate back up into the high. Since price just running, they really ain't much to talk about now outside of just all the analysis that we just did. It's just now you just sit back and watch price just run and see what it wants to do. We can go down in time and look at more PD arrays that we can react off of. We got a inversion fair value gap here, right? So this is on the 15-minute time frame. We got an inversion fair value gap here, and this looks like the first time we're trading back. We'll be trading back up into it. So want to watch how price reacts here, right? When price trades up into that, you can see some type of reaction based off of the inversion fair value gap here. That's the first imbalance created going up. Then we broke down, got the change in state delivery. So now we got an inversion fair value gap for the first time we're trading back up into it, right? And then I ain't gonna worry about going by any lower. You can go as low as you want. I'm gonna take some of this off so we can see, right? I ain't got to scroll back over. You can go as low as you want. Go down to a 5-minute time frame. Look to see if there's anything in there, right? We got same thing over there. We have a SIBI there on the 5-minute time frame, order block there on the 5-minute time frame. You go down to a 1 minute and look at, what all you got there. Same thing, imbalances and all of that, right? You got you got some liquidity that can be swept on the 1 minute time frame there, right? Make this some internal liquidity there, right? Some liquidity that can be swept on the 1 minute time frame prior to getting to that high that we was talking about. Different levels, what I'm saying? There's different levels of liquidity there that we can get to, and that's this right here is the ultimate one that we was talking about. We can even take that. I'll make that one fatter. All right, we was talking about we can take that and then come back down and give the opportunity. That's the high that we was pointing out there. All right, so now as we see here, we've gotten up to that 15-minute inversion fair value gap right there. We got to the 15-minute inversion fair value gap, and now we're starting to pause. We're going into the macro. We're entering the macro time. All right. Map out our macro window, 950 to 1010. Okay. And now that we've mapped all of that out, now let's bring over our 15 and 5. Put our 15 and 5 over there. Put our 1 minute here. What is all this drawing still over here? All right. All right. Let's give the 15 and 5 a little bit more room. All right. Can't really get much of it. Ain't much to look at, but we know what those levels are, right? It's hard to get like the whole thing in so you can see the structure, but we know what those levels are, right? That's our hourly fair value gap. We're looking to see how does the hourly candle close in relations to this SIBI right here, right? If we close above that SIBI in the next 5 minutes, right? If this next 5-minute candle closes above 25,320 and a quarter, then that would give us an inversion fair value gap right there. That's the first SIBI that was created before that turtle soup back there. All right, we're watching to see if it creates an inversion. Now, if we close above consequent encroachment, right, that's showing the weakness on the bearish side of this right here. That's showing like more of a willingness to want to create an inversion if we close above consequent encroachment of that. All right, closing above 25,320 and a quarter creates the inversion fair value gap. Closing above I can't see what the consequent encroachment is. I don't have a fib tool that's locked in on that. Then of course I can't see it because the line is right in the way. 25,290 and a quarter is consequent encroachment. All right. Okay, we're in the macro time. Just traded back down into that BISI right there. All right, we just traded down into that BISI right there. Why am I looking at that BISI right there? Because I'm watching on the 1 minute time frame from that high to the bottom of that order block right there, that bullish order block there that brought us back down into a discount inside that BISI. That's why I was looking. That's why I'm watching that 5 minute BISI right there. All right, so we've expanded from that order block there up, made a high, retraced back down, and took out a low inside of a discount, and now we're moving back up. And that's why I was watching that 5 minute BISI right there. I'm sorry, y'all. A lot of the stuff that I be watching, I don't have time to like mark it out because price is moving really fast, and I'm kind of explaining it. And like when I said we trade down into that, then I had to explain why I was looking at that, because You just have to train yourself to be able to see this stuff in real time and fast. And I can't. It's not a signal service, so I'm not apologizing because hey, I missed. I could have been a trade. It's just that I be wanting to say everything in real time, but realistically, prices moving so fast. It's just you got to do the work. You got to go back and do the work and train yourself to see it in real time like that. Like, you know what I'm saying? A lot of times people be like, Tim, why were you watching that fair value gap? And now I'm explaining now why I said we just traded down into this BISI right here. Then I had to go back and explain, right? Because looking at multiple time frames, right? You say, Tim, we're way up in a premium. Why are you looking at that BISI, right? Because we've been showing extreme bullishness. And if you look at price here, right? Price extended up, then we built structure, and then we left that area, leaving that area. Now that's a balanced price range. Above it and you're bullish, it should support price, right? If we was bearish when we hit this SIBI, we should have cut through it like butter. We did not, right? Then we moved away from it, created a BISI, and created an order block. So now I'm coming from that order block to the high. From the order block to the high, we come back to a discount, sweep sell side inside the macro time, and now we're extending up. That's why I was watching that 5-minute fair value gap right there. Higher time frame BISI, lower time frame details. All right, now we're at consequent encroachment of that 15-minute inversion fair value gap. That's the BISI that we come back to for the first time on the 15-minute time frame. Now that we're here, right, you can anticipate some type of pushback, right? Doesn't mean you have to get it, right? But you can anticipate some type of pushback. We're going into 10 o'clock, right? We've hit consequent encroachment. So now you're coming into a new hour, right? What do? We anticipate some type of manipulation. Right, so now we're at a spot that we could get some type of manipulation, going into a time where we could get some type of manipulation. So we anticipate the manipulation. All right, we have not hit any level of liquidity yet, right, going into, and that's the overall liquidity that we're looking for. Right, so do we got to get it right now? No, we don't have to get it right now. We could very well go up, touch liquidity, and then go back. Or we can very well come back, take liquidity, right, and then continue up. You just have to wait to see what price offers you, right? And that's why you always want to have manageable stock. I mean, like defined risk. You always want to have defined risk, right? You always want to have defined risk. And you always want to say, hey, this is where I'm willing to buy or sell, right? And right now, there's nothing wrong with you saying, all right, based off what price has done this morning since the 9:30 open, right? This is from 9:30 right there. And this is from the order block, right? There's nothing wrong with you saying right now, saying, I'm not willing to buy unless we get back down below 25,245 3/4. Right? And there's nothing wrong with that. Why? Because we have had a large expansion, right? Without coming back down to a overall discount to allow participation. Right? It's just been a straight shot up. It's just been a trend day to the upside thus far. Right? So you could just be sitting on your hands, relaxing, saying, I'm waiting for price to come back down below 25,245 3/4 before I start looking for any buying opportunities. Because we're in a buy program right now, and you're not trying to trade against the grain. All right. We've hit a spot that could potentially send us back down. Does it send us back down? No. You sit there and wait to see. All right. Sit there and wait, and you start to build out the narrative. Okay. Start to build out the narrative. We have a low right there. All right. If we come down, take out that low. right? If we come down, take out that low, then you watch to see, do we come back up and then come down? If we take out that low, we come back up and we drop down without taking out that high, then you say, okay, smart money reversal, low risk short, right? And I'm looking to come back down into a discount somewhere where I can buy. Where can I buy? I have a busy down here in a discount that I can buy off of, right? With defined risk, right? Busy, right? Mandatory stop right there, right? Safe stop below the low or even below that low. There's a swing low there, swing low there. You define which one you want to use, right? But mandatory, if that's going to be a bullish PD array, price should not see that low right there. The first candle of that imbalance, price should not see that low if the algorithm is going to use it as a bullish PD array. You want to have defined risk. It's 10:05. That's about all I got, man. Do anybody got anything for me?
The level you, excuse me, saying possibly coming back to, that's the consequent encroachment of that hourly inversion?
Talk about this big one right here.
Yes.
Nah, that's equilibrium of this whole move up right here.
When we start displacing? Okay.
Yeah, from this 915 bullish order block here.
Okay.
From that low up to the high. That's just equilibrium of this whole price leg right here.
Okay. So sometimes, like you say, it's possible just to wick down into that area and still respect that inversion as long as we're not closing, right?
You talk about on the hourly time frame?
And then we have one on the 15-minute as well.
I mean, it don't matter. It don't matter how we close in reference to it. When I'm looking at, okay, this is where I'm willing to participate. When it comes to, right, because right now we got the inversion fair value gap because we closed above it, right? We closed here, so this is inversion fair value gap now, right? So if I'm wanting to participate down here, I'm not overly concerned with if price, like this 10 o'clock candle, I'm not overly concerned if this 10 o'clock candle doesn't close back above here. What I'm concerned with is this is where I want price to come before I start looking for any buying opportunities. I'm not buying up here in the premium. That's what this is about here, right? This is like, I'm not buying in the premium up here, right? So if price doesn't come back down and give me the pricing that I want, then I'm just gonna, you know what I'm saying? I'm just gonna let it go. That's more so about that. Now, when you're looking at the actual PD array itself, right? It's not that you're not saying, because just because we create the inversion fair value gap right now doesn't mean it has to use it right now, right? Because since we've extended so far, right? Now you got to think about it. What is price going to do here, right? Are we going to create an imbalance here? Are we going to just overlap this and not create an imbalance? Okay, so you got to let these candles on the hourly time frame play out. You know what I'm saying? You let them play out, because now you say, okay, we've created an inversion fair value gap. All right, that's been done. Now that we've created that inversion fair value gap, the manner in which we created it, we have a huge buy side imbalance now. You know, we know price seeks liquidity and balance. We got a huge buy side imbalance. So now you got to think about, price may want to revisit this. it hasn't given me an opportunity to participate, let's revisit it now so that I can participate, right? And then if it revisits it now I got manageable risk to give me that I want to participate. I can say I want to participate off of the gap. I can say I want to participate off of the breaker, right? I can say I want to participate, you know what I'm saying, whatever kind of way I want to participate. But now I got manageable risk. I got defined risk for me to participate in, and I'm buying in a discount. Now, as far as the inversion fair value gap goes, right? Once we, if we continue to displace up here, right? And then start to trade back now, right? I don't want to see price eating through this inversion fair value gap, because we've created the inversion fair value gap. We've pushed through liquidity. So now when I come back down, now I don't want to see price coming back down here no more. I want to see this just act as a breakaway. I don't want it coming here no more, because we've extended up here. And now I don't want it to come all the way back down there, right? For a low resistance liquidity run condition. Because you want to create it, trade away from it, then trade back to it, right? You don't want to create it here, and then if we start trading back down, right, now you're like, oh, we're trading too far past this, yada yada yada. But like you said, it can come all the way down here and then have this super long wick that's sticking down there. But then that's not good, because now you got a long wick that you can possibly retrace back down into, and now you're setting up all these scenarios for potential high resistance liquidity run conditions, right? Whereas we get this huge expansion, let's go ahead and get the retracement and then go get the delivery. Consolidate, expand, retrace, deliver.
So, okay. That makes sense. I keep forgetting. It's all about, like you said, how it, even though we did create the inversion, it's all about if we would have extended to take the liquidity, then we don't want to see it come back to that inversion. But even though we created it, we didn't really take anything. So now you said we can look for it to come back into that range to give an entry, so to speak, in discount. But if we would have kept going, extended more to take that liquidity, then we know we really want to use that as an inversion at that point, not this quick invert it and come back and expect it to keep going, right? Because we haven't come into a discount.
Mm-hmm. And like here, this right here, watching this candle there, right? Do we form a BISI? What type of BISI do we form? Do we get a retracement candle here? Do we get an indecision candle here? Or do we get an expansion candle here, right? So if we get an expansion candle here, right, we're not anticipating price to immediately come back into this and fill it for low resistance conditions. We're anticipating price to continue up before coming back, even if it come back at all. If we get a retracement candle here, we're anticipating price to maybe like dig right into it, or maybe even reprice through the whole thing before continuing up. If we get an indecision candle here, right, we still need more information, right? We still need more information. But if we create, like, if we, like, now we're just going into like the do pattern, right? Do, right? So now we moved up and we're engineering more liquidity. Okay, so we start engineering liquidity. If we close out this hour with a BISI right here, now, right, now you're looking for this BISI and this inversion fair value gap to support price, right? And inside this BISI here, right, we ain't got a BISI now, but just say if that was the low of the BISI right there, right? All right, let's say that was the low of the BISI right there, and we come in there, right? Coming down, the consequent encroachment of that BISI will bring us back down into a discount of our range, and then that would also bring us back down to this balanced price range right there, right, into this bullish order block. And that could be an area where you'd be like, okay, if price stops there and supports there, it could potentially go back up for a low resistance liquidity run, right, and never come back down to this, right? So it's all about watching for the signatures and understanding how much risk that you can afford to put on. Because if we stop there and we came back down here, now you have defined risk up to this point, right? But then if algorithm want to keep going down, you got more imbalances down here. This would be more of a higher resistance retracement back down. But like we always say, you always want to think about, right, this right here is an area of accumulation, right? This is the area we're accumulating right here, right? So when let's go to a 5-minute time frame, right? This is our area of accumulation right here, right? And when you're looking at an area of accumulation, right, you go to the lowest body from when we leave that area up to the highest body from when we left that area. And then we look at our OTE. I need to reverse it. Right. Highest body. Right. Lowest body. Right. And your OTE, right? You're leaving your area of accumulation, your OTE, right? Coming down below that equal right there, sweeping that low right there we was talking about, right? Coming down to what did I just do? Oh my God. Oh, I'm on the wrong screen. All right, so coming down, OTE would be here. All right, there's that gap that we was talking about. That gap is resting inside the OTE area. You're 62, you're 70, you're 79, you're 70 and a half, I mean, right? Because we know that's how we measure our OTE. Why is that not anchor right? Right? We measure our OTE based off of the area of accumulation or distribution, right? When we're leaving that area of accumulation of distribution, we go from the lowest body to the highest body, right? And this is our OTE. OTE lines up with that lower BISI, the one we was looking at from the beginning there, right? Brings us down to there. So you can say, like I said, you say, hey, I'm only taking a trade down here, right? OTE is down there below that price, right? If it offers it to you, it offers it to you. If it doesn't, it doesn't. You say, hey, it just wasn't my day, right? But this is all the stuff that you're watching and planning for based off of how much risk can you put on, right? How much risk can you put on? And then if it doesn't offer it to you, then you allow for price to establish new structure that you start to trade off of, just like we talked about over here. Price took off, right? Established new structure there, and then started to respect that structure there. So now, if you in the mind frame of we having a low resistance day, this is the range you're looking to participate in. Okay. I'll just do it over here. All right, so this is the range you're looking to participate in. Yes. Right there. All right, so this is the range you're looking to participate in here. All right. I got a lot going on. There's another fib somewhere. Get out of here. So now, okay, so here you're saying, hey, this is the range. I believe we're in a low resistance liquidity run, so I'm participating in this range here, right? So you'll be looking for reasons to buy in a discount, right? So you got a BISI right here, right? You got defined risk, right? Not saying you're right, you're wrong, but you got defined risk. Now, if you say, hey, we've come to inversion fair value gap that I want to see price send me back down into an overall discount, then you wouldn't be trying to participate in this range right here, right? You would just be patiently waiting for price to come back down to a discount. Then you would be looking for reasons to participate down here, as we said before. Right, just patiently waiting for price to retrace. We consolidated, expand. Now I'm waiting for it to retrace to give me a chance to participate in a discount. Right, and if it never does that today, we just keep running off on the plug. You should be like, hey, it just ran off on me. It didn't give me what I wanted. Right, it didn't give me what I wanted. It was just a trend day to the upside, and it didn't give me what I wanted. So now you're here. It's 10:20. Right, and this BISI here, right, is not pushing us back up. Right, we came down to that 5 minute, right, pushed up a little higher, then we stopped at consequent encroachment of the 15-minute inversion fair value gap. Now we've pulled back down into that same BISI, right, and now we got these down close candles. If you're respecting bearish order flow, right, you're watching these down close candles to see how do we trade within these down close candles. Right. That's mean threshold of those down close candles, right? And now we've added a little bit lower low, right? So you're looking at how do we close in relation to these down close candles, because we came down into the BISI, right? The BISI pushed us up into there, right? So now we've come back down to it again here, right? And then if we close below consequent encroachment of that BISI, right? Right, we still haven't closed below consequent encroachment of that BISI on the 5 minute time frame. What's that? That's 1950, 19. Okay. All right. We still haven't closed below consequent encroachment of that BISI, right? But if we close below consequent encroachment of that BISI, right, then you're looking to see if we want to continue deeper and come back down into that overall discount that we was looking at. But right now we're sitting here at consequent encroachment of our inversion fair value gap on the 60-minute time frame, and right now it's supporting price. Okay, then if we can't push back up above that high, like I said, if we come up here, don't take out that high, then come back down and take out that low, then you will be looking to say, hey, smart money reversal, low risk short, right? Is this going to take us back down to our discount? All right. But what we don't want to do right now at this time is continue to try to chase it long, right? Because based off of the long, we're still in a premium. $10.23. $10.23. Well over time. Do anybody got anything for me? Shout out to everybody that pulled up. Hopefully y'all got something out of this. Who's still in here? Who stuck it out with me? I want everybody to put a 1 in the chat right now so I can see who stuck it out with us. I see people leaving. If I don't see 15, it says 15 left. It says 16 and then somebody disappeared. If I don't see 15 ones in the chat, Facilitation February is ending today. We ain't gonna have no tape reading tomorrow night or Friday morning. I see 1, 2, 3, 4, 5, 6 ones. We 9 ones short.
Where you see 15? I only see like.
I'm looking at YouTube.
Oh, okay. I was gonna say I'm in there twice, so I put in 2 ones.
Shout out Liquidity 4X. Shout out Avery. Shout out J-Rock Obama. Wayman Tisdale. I ain't seen Wayman Tisdale in forever. Shout out Tyreek. Shout out Felicia. Here to Learn and Share trying to put 14 ones in. I could see the names Here to Learn and Share, so don't be trying to put extra ones for people. You try to put extra ones for people. Yeah. We at that time where prices just, you know what I'm saying, it ain't doing much right now. Y'all know how price do, man. We make a big move and then it starts sending people to the reset line that chase that move. Right? Right now is that time just to be patient. It's that time just to be patient right now. Because imagine if you bought here off this fair value gap, right? Nothing has invalidated your trade yet. Nothing has invalidated your trade. But imagine now you're sitting in this trade, right? Because this is your mandatory stop right there based off how Michael teaches it. And then if you go for just a 2-to-1 risk to reward, right, you would need price to exceed the target that we're looking at, right? But imagine how you're feeling right now in this trade, right? Are you comfortable? Are you really like, oh yeah, I made a good decision right now? Let's see. Because you got picked up on the 955 candle. So that means you've been in this trade for 30 minutes. You've been in this trade for 30 minutes. And you just now are back above break even. Right? You went up 46 points. Was living high off the hog. Woo, I love Tim. Tim be calling out them good trades. And then all of a sudden you was down 32 3/4 points. Oh, I hate Tim. This ICT stuff doesn't work. And now you're back up 16 points. Oh, wait a minute. Maybe it does work. Are you very comfortable right now? All right. The trade hasn't been invalidated. All right. But right now, if you was in a trade that you took there, you would be praying. You would be like, please, let it take out this high. Let it take out this high. Because he said if it don't take out that high, if we come back and take out that low, then we're on the sale model. Please take out that high. Please don't stop at that inversion fair value gap and come back down and make a new low. Please don't. That's where you at right now. We getting ready to go into 11 o'clock. 11 o'clock usually run against the people that's winning in the morning. When we go to 11 o'clock, they usually, and the buyer's been winning. If we go to 11 o'clock, we probably gonna run against me. No, that's what you saying right now. You saying that right now. No, please don't come back down. No, stop doing that. Oh, it's another red candle. Oh my God, it's another red candle. Oh, please help me. Please help me, little baby. Oh, when I look at the 15-minute, I bought the top fair value gap on the 15-minute. I bought the top one. Oh my goodness. If this 15-minute candle for the closing is going to form a swing high. Oh my goodness, if it forms a swing high, that means we going to go back down into this one. I'm in trouble. I'm in trouble. That's what you're thinking right now. You're thinking that right now. And since you're thinking that right now, right, you probably done close your trade. I'm getting that. Because you're nervous. You're panicking. All right? The mental game of trading. Hey, man. If ain't nobody got nothing for me, I'm about to go, man. We didn't get all our ones in the chat, but I'm still going to come back tomorrow night and do the tape reading. We got somebody out there that's lurking. They don't want us to know who it is in the chat. They don't want us to know who it is in the chat. Shout out Hit Learn and Shell and Yolanda for trying to put extra ones in the chat. Like I can't see the names of who actually doing it. But all Price did was just run off on the plug today. So we got an opportunity to see a couple things like respect Price as far as what order flow was given at that time. But it was just like running. So kind of focused on like the analytical side of it and giving ranges you can watch with defined risk. Hopefully y'all was able to glean something from it as far as a lot of signatures. We didn't have like a lot of signatures today like we did last night. Last night had quite a few signatures. We did have a few signatures there where we was looking at like balanced price ranges, retracements back in a discount of extension legs, what we was talking about up here, where we retraced back into a discount of that piece of the extension leg right there and made another high. This area here, we was watching this area there to act as the dealing range. That's still supporting price, right, in line with the 60-minute fair value gap. That's still supporting price. Okay, you want to see that high taken out, right? You want to see that high taken out because this is that. Remember, that's our low, that's our high, that's the dealing range we're in, right? We came back down to equilibrium, slight discount. When we said there's your fair value gap you can buy off of, right? If you was trading in that range, your defined risk is there. You want to see that high taken out, right? If price stops here and loses that low, right, then the likelihood of a deeper retracement is in place, because that would give you a smart money reversal and a low risk sale here if we continue back down there, right? Right now the 15-minute is seeming to move into a holding program. We formed that swing high, right? We formed that swing high right there, because we created a busy. We got a retracement candle. Get out of the way. Let me just go to one screen. Get out of the way. Okay. So we come here. As we see here, we created a BISI with a retracement counter there. Right. We went down in. Right. Repricing deep into the BISI. Okay. And created a swing high. Now that we've created a swing high at an anticipatory reactionary point, now we're starting to get a little bit of a pullback off of that. Right. So now taking out that low, then we're watching our discount BISI. Right. And that would bring us back down into that discount area that we was talking about from the beginning based off of the overall time frame. Right. We're not there yet. So, you don't want to clap it up and be like, oh, it's getting ready to go down there. Right. You got to allow price. You got to allow PD arrays to do their job. Right. Go down to a 5-minute time frame. Right. These are our, remember those candles we were watching there. Right. We came up above mean threshold, but then we immediately came right back down. Right. Remember we said if you're bullish, you want to see down close candle support and price. For bullish order flow, down close candle support price. Bearish order flow, up close candles resist price. So we, with these 5-minute candles here, right, we closed back above mean threshold, but then we immediately came back and closed back down below mean threshold. All right, so showing a healthy respect of these down close candles. All right, so now we're coming down, still haven't taken out that low, but we're moving toward it. All right, so now what are you watching? You're watching how does price close on a 5-minute basis in relation to that down close candle there. Do we get back above mean threshold, or do we respect mean threshold of the up close candles? Right? Are we respecting bearish order flow, or are we respecting bullish order flow? 1-minute time frame. Right? We've come down, like we said, got a bearish break in market structure, traded back up. We haven't taken out the high. If we take out that low right there, then we're looking at that as a smart money reversal, low risk short. Right, and we'll be on the right side of a market maker sell model. Then you want to see price come back down into the discount, offering an opportunity to participate. All right, y'all. I'm finna go. Nobody saying anything. Y'all go ahead and give it up to yourselves for pulling up. Drop one of Clue's balls for everybody who pulled up today. All right. If you got something out of it, hey, I guess I done did my job. If you didn't, I'll try my best again next time. The educational portions of it is done. The next tape reading will be tomorrow night at 7. Yes, the next tape reading will be tomorrow night at 7. And then we're wrapping up Friday with another tape reading at 9 a.m. All right. All hearts and minds clear. All right. Hey, man. Do me a favor. Hit a like for the algorithm. Subscribe to the channel and turn on all your notifications.
Thanks, Dip.
Ah, man, you welcome. Who that? Seawalk? Who that?
Yeah, appreciate you.
What's going on, Seawalk, man? I ain't even gonna say what's up to the gang. Who in here? Who we got in here? Who we got? Where's my Zoom? What's up? We got Yolanda. We know we got Yolanda in here. What's up, honey? We got Tish up in here. Seawalk. We got Steve, Marco. Yolanda in here again. We got RN Deborah. That means she's sneaking and listening at the nurses station right now. Whenever we see RN Deborah in the chat. She's sneaking and listening at work. And thanks to everybody that was on YouTube. You know what I'm saying? All the names that I did see and all the names that I didn't see. I appreciate y'all. Shatter. I don't know who Shatter is. Shatter, what's up? I ain't never seen that name before. What's up, Shatter? Calio. What's up, man? I ain't seen Calio in a month of Sundays. Calio, where you been? Calio, where you been? Shout out Run the Green, man. I ain't shout out Run the Green book, man. Run the Green wrote be writing books, man. Y'all go to runthegreen.com and check out her. But she be writing books, man. runthegreen.com. Go support my sister. She said I bought one of her books a long time ago. I don't remember that. I bought 2 of them last week. This one in the digital download called Before the Butterflies. Y'all go support Run the Green, man. She out here doing good things in the community. Doing good things in the community. I'll see y'all tomorrow at 7 p.m. Eastern Standard Time, man. Again, thanks for tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That just means big spot if you don't hablo español, man. Till the next time I decide to get on Al Gore's internet and share my thoughts on this thing they call price action. Y'all be safe. I hate trading streets, man. Gone. Yeah.